Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Flavio Lobato of Ikove Capital. Flavio, thank you for joining us.
Hey, Hall, thank you for having me.
Great. So can you tell us a little bit about your background before starting to invest in early stage companies?
Absolutely. I'm originally from Brazil. I've been here in the States for 35 plus years. Started my career in investment banking after graduating from business school and worked at Goldman in the 90s during the first, let's say, internet boom. And after the Goldman IPO, really focused my career on alternative investments and was part of a startup that I launched from scratch called Swiss Capital out in Lugano that advised on about 1.5 billion in alternatives, helped seed a lot of successful fund of funds in Europe. After exiting from that business, I ended up joining a fund called Lionsgate Capital out of London, which was a fund that I helped invest in the early days, moved to New York and helped set up the business here in New York. And that fund went through a successful exit and about 6 years ago. So I've always been passionate about technologies and really wanted to be involved, but through a different model than just setting up a traditional venture fund.
What's your advice for people that are just now starting to invest in startups? What would you tell them to think about before they jump into it?
I think the biggest differentiator is to do quite a bit of upfront due diligence. I think that's what separates having the potential of losing all your money, right, versus making quite a bit of money. And this is an asset class that does require quite a bit of work and understanding. So that investment upfront in heavy due diligence is crucial for the success of having a positive return profile.
Well, you've been in the venture capital industry for some time. How do you see the industry evolving these days?
Yeah, it's really interesting. When my partner Rodolfo Bellezzi and John D'Orazio and I decided to set up Ikove, what was interesting, this is 2014. And interesting enough, 2014 has been quite an interesting year. Back 5 years ago, unicorns, and especially if you go back maybe another 5 years, a decade ago, unicorns represented about 1% of the deal flow in all of venture and about 1 to 2% or less than 1% really of the money invested in venture. You fast forward to 2019, and what you've seen is that in the deal level, unicorns still represent about 1 to 2% of all the deals in venture. But as of last year, it represented around 30% of all the dollar invested in venture. So of the $130 billion that was invested last year in venture, a big chunk of that was actually invested in very few companies. And that is a very significant change that has really occurred over the last 10 years and specifically since 2014. And what's interesting to see also since 2014, early stage deals, the number of deals have been cut in half, right? So whilst let's say the far end of the curve is doing quite well, early stage is really suffering. And by early stage, I mean up to Series A, right? So company today to attract Series A funding needs to be at close to, if not at a Series B type of milestones when you compare it to 5 years ago.
So basically, all the money is shifting to the later stage, chasing the unicorns, so there's less money to start the earlier stage ones. So what are we going to do about that? Do you think that unicorns are going to continue to eat up all of the capital, or do you think that's going to crash and burn as some of these companies go public and they don't quite get the pop that they thought they were going to get?
Yeah, well, I've been very vocal about that and have written extensively about that danger. It's almost like a game of musical chairs. And if you look at Uber and their IPO, really 80% of the $20 billion that was raised in Uber was underwater. So it really is a situation where a lot of the upside has been made as a private company, right? And when you go as a public company, that upside has been quite limited. When you compare that to an Amazon that went public at a market value of around 450 million, I mean, the potential for a next Amazon to come in and have that kind of returns in the public market, I think are limited, just given how things are now shaping up. So in my view, early stage continues to be the best place to be. And that's where our strategy is really focused on. If you really look at how venture came to be in the 50s and 60s, and you listen to the original venture capitalists, their commentary was always about technology commercialization, right? And you hear about Genentech and Cisco and companies like that. The VCs were really involved in the early days, and the industry was really a marriage between West Coast research being linked up with East Coast funding, correct? And that whole concept of tech commercialization was really what the original venture capital industry was all about. You fast forwarded to today, that whole concept has been lost in translation. And you have, in the US alone, $70 billion invested in basic research through universities. And if we're looking for the next big thing, I'm telling you, that next big thing is already being developed at the research labs of large universities. The problem is that less than 1% of that amount is actually invested in commercialization. And given the fact that VCs now are coming in so much later, the value of that, which I define the moment that you're able to really bring in a technology to a point that can attract institutional capital, is greatly elongated. So the reason why me and my partners decided to set up Ikove was really to build that gap and work very closely with leading research labs in identifying these disruptive technologies that are being developed in leading research institutions and provide the necessary infrastructure and funding to take them all the way through, hopefully through an exit.
Well, it looks like you're following the venture studio model using a venture development methodology, but maybe you can tell us more about exactly how does your program work?
So we launched Ikove. So we have a few tenets that I think are very unique. First of all, we go directly to the source of innovation. So we have a team of 20 plus, almost 25 people today. We're based in Columbus, Ohio, and that is by design. And I'll tell you a little bit more in a second. But basically, we go directly to the source of innovation. We identify and vet the IP directly from the universities or private research labs. And those that we think are interesting, we bring it into our proprietary startup nursery. Right. Number two, we go where very few people are looking. So we stayed away from the coast. We're not really working right now in New York, Boston, or the Valley. Of that $70 billion that I mentioned earlier, about 30% of that $70 billion is invested in the Midwest. So we decided to, and less than 3% of all venture dollars is invested in the region, even though it's the largest economic region in the country. So from our perspective, setting up in Columbus, Ohio, given those statistics, just made a lot of sense. And within Columbus, you have institutions like the Ohio State University. Down in Dayton, Ohio, we have the Air Force Research Laboratories. You have the James Cancer Center. You have Cleveland Clinic. I mean, it's just a fantastic ecosystem of basic R&D. So our goal originally was to base it out of that. We're starting to expand that into other regions such as Pittsburgh, Florida, regions that also receive significant R&D and not a lot of attention from VCs. I think another very important tenet that we do is we like to invest in painkillers and not vitamins. So our investments are in deep tech backed by very strong IP and technologies that solve big problems, right? So we're involved in STEM, robotics, AI, IoT, MedTech is a big team for us. And another big team is we build to sell, right? So it's fine and dandy to build a strategy and look for multi-billion-dollar exits, but it's very hard to build a business around that. So as we're coming in as founders and very early at that concept stage, I like to stress that. I mean, we are, like when Ikove is getting involved, there's really very little outside of that IP that has been developed, right? We go in, identify it, vet it, build a team around it, and once it's ready to come to market, we then launch it as an independent company, and we provide all the support that's needed for that team to take it to market.
Do you have a couple of portfolio examples, one or two that you've launched that you can describe and what they do?
Absolutely. One of the technologies that we're very excited, it's actually a nanofiber technology that replicates the extracellular matrix of the body. And we've created a holding company called Pyrogen Technologies that is working in several verticals: wound care, orthopedics, vascular, and hernia. Very proud to say that two of our verticals, our wound care and orthopedic verticals, have we've gone through and received 2 FDA approvals over the course of the last 24 months. And both of the companies are now in early stage commercial, and especially the orthopedic side is in pretty substantial revenue traction. So it's starting that L-shaped curve, but being able to identify these life-changing technologies and going through FDA and then supporting that growth is just very rewarding to see. Another tech that we're very excited about is a company called Nikola Labs. It's based in Columbus. And Nikola, what it does is it's a wireless power company that uses this technology for powering low power sensors in a distance like 25, 30 feet. So if you really think of the advent of IoT, what is IoT? It's basically sensors that are going to be tethered everywhere. There's a significant problem with that is that you're going to have 70 billion sensors in hard to reach places, and how are you going to change batteries, and the sensors cannot really be hardwired. So we've identified a go-to-market strategy where approaching smart industry and specifically predictive maintenance. And Nikola has launched breakout product Q4 last year that provides smart analytics and really sensor-based technology using wireless power and installed in several of the leading manufacturing companies in the United States. And the company, again, is entering hyper growth. So that's an area that we're very excited as well.
Well, great. Well, it sounds like a great model of the venture development you have going. What are the challenges in implementing a venture development program like that?
Well, it's full of challenges. So every day is, but I would say finding good people. It's really, that is kind of the bandwidth constraint, especially in an economy where you have unemployment rates at this level. So attracting and identifying potential CEOs and COOs that can come in and run these different companies, kind of put a normal limit of maybe launching 3 to 5 of these businesses per year. And so we're not in a rush, but that has been kind of our track record, right? So just being able to identify and attract world-class operators that can come and join us. And of course, we now have 15 companies in our portfolio, in making sure that the funding is in place for all these different businesses. It's always a challenge. So we're providing that support. And so it's not a matter of just raising money for one startup. You're talking about raising money for a substantial amount of startups. So having the background that I have and having raised billions of dollars in the past globally has helped us being able to execute the strategy.
Well, great. Well, you see a lot of applications out there. If you had to pick a couple of them that you think are great opportunities to pursue, or new subsectors that are coming up that you'd like to pursue, what would you call them out as?
Yeah, so we're scouting technologies and opportunities all the time. I mean, that's really what we do. And so one of the areas that I'm actually very excited about is this whole area of lab-grown meat. And we have all the hype around, let's say, the vegan burgers and the Impossible. These companies have just recently IPO'd, and that just showed the demand for this market. But the next generation here is actually going to be, if you really want to at some point begin to reduce CO2 emissions and all of that, is how do you deal with cattle. And being Brazilian, whenever I bring this up, all my Brazilian friends, they want to shoot me. But it basically having the ability to really grow meat in a lab. And so we're working closely with some of the leading labs in the world, because we do have a core technology that's able to bring that very thin layer of meat that's currently able to be built into something that could be a tasty burger, right? So that is, in my mind, a multi-billion-dollar industry that's just getting started, and we're very involved with that. Another area that we're investing in heavily now, it's really the ability to detect radiation exposure in a way that it can get a test done within minutes, right? Current technologies are, provide a day or so, and by that time it's too late. So we've been looking at biodosimeter level types of technologies that can provide this type of reading in a way that is for triage or even for oncology. So that's an area that we're very involved in right now.
Well, great. Well, those sound like good opportunities to pursue. In the last few minutes that we have here, what else should we cover that we haven't?
I think we'd love to connect and talk to to people that are interested in early stage and specifically, tech commercialization. We could have many more ecos. There are thousands of VC firms out there, and maybe a handful of people that are doing what we're doing, and really having the ability to have more investors come in and participate at the early rounds. The return profile, in my view, is basically the best out there, and we would love to have conversations with these people.
That's great. Well, how best for listeners to get back in touch with you?
Sure. Our website, ikovecapital.com, is ikovecapital.com, and my LinkedIn is Flavio Lobato. So look forward to getting in touch.
Great. We'll put those in the show notes, and thank you for taking time today, and hope to have you back for a follow-up soon.
All right, Hall. Thank you so much for your time and for the invite.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.